Good morning, everybody. Today is Tuesday, May 5th, Cinco de Mayo. And before we get into things, I want to do a little housekeeping stuff here. In the comment box here, this is a link to the website, QOL Trading. So I wanted to go over a few things there. At the very top, when you sign on to the website, this is what you see. You can scroll on and look through the other things, but I just want to go through the kind of punch list here. So right at the top here, click Discord here. If you want to learn more about us here, click Learn Our Strategy. And then when you click Learn Our Strategy, it should bring you to a page right here where you can schedule a 15-minute call with me. And it pretty much goes out. I'm pretty booked out 4 or 5 days ahead. So, you schedule that ahead of time here. So that is to learn a little more about what we offer outside of things. And then, of course, you can join the Discord desk here. And then lastly, right down here, right here, put your name, email address, join the QOL circle, and then you will be on our subscription list for the weekly newsletters that we put out on Sundays. And it pretty much gives you a recap of what happened in the week, along with what to expect with the week to come. So pretty simple stuff right there. When you do click on the Discord, you'll bring you to, and then you join the Discord. Everybody that's in here right now understands the different channels that we have. But what I do every morning, I post a link here for the live pre-market analysis, of which that's where we are right now. So you can click on it right here. The best way is, if you're a new subscriber, just subscribe to the channel, hit that notification button, and then you'll get other future videos. But if not, you come to the Discord, you'll get a little buzz every morning. Also, we have a levels channel in here. So if you have any other equities that you want me to cover, just drop a comment here, drop a comment in the chat here on the pre-market analysis, and I'll go over some equities levels that if you want me to cover. I do not do any penny stocks, though, just so you know. And then once you're in the free community here, this trading community, and you want to get access to our live trading desk for live trading from 9:30 a.m. to 11 a.m. Eastern time, the directions are right here. Get your trade desk access. Very simple. You click in here, then you come in and click on the link right there. It'll bring you here. Join. It's a monthly fee, and which is significantly lower than what the one-on-one mentorship is. But and then also, for new people, they can also join free access. But if you're already in here, you won't need that. This is just to access the trading desk right here. And then once you're in the trading desk, you'll get the live trading platform, which I'll go over later on in the video. So let's get right into things right now. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. Tuesday right now, what do we have on the docket here for today? At 9 o'clock, ISM service manufacturing. Jolt's job openings at 9 o'clock. So be prepared at 9 o'clock, new home sales as well. And then you have some Fed speak in there. So I would be, wary on having any on, if you're just scalping, watch your positions at about 9 o'clock for today. So that is going to be it there. Let's go over earnings. Earnings today after the close, you got AMD. I don't see anything else for today. You had Shopify before the market. If that came out already, I don't know if that's going to do much. The markets are kind of pushing higher right now, so I'm sure it has something to do with the Strait of Hormuz right now. So what else do we have for the rest of the week? I don't see anything too earth-shattering. Oh, excuse me. McDonald's before the open on Thursday for all you Dow Jones players. And then you've got Wendy's, which is not going to do that thing on Friday. What else do we have there? That's it. So let's get into things. We'll start out with the VIX like we normally do. The VIX is definitely pulling back down to levels which are comfortable levels to trade. However, be prepared. It did close this gap up here from the other day was it the 17th? So be prepared, though, that we have these gap downs from April 8th, one at $25.74, and the last gap down that we've had here since March 30th, $30.34. So if these elevate and they get above your 20 for starters, You got to watch your certain levels. Excuse me. The 200 is the first level, the line in the sand here. Here's your close yesterday at 1830. So if you get above that, get above the 200, you're going to push into the 20. The 20 is 1894. You got a high from yesterday sitting at $19.08, and you've got the 100-day moving average sitting at $19.50. So just watch your levels. If you do regain this 100-day moving average, you're probably most likely going to push into this 50-day at $22.16. It aligns up, very nicely with a 20-day moving average, exponential moving average, that is, at $23.18. And then, of course, if you pop that, you're going to, quickly rise and hit that $25.24 gap down from April 8th. So let's get into the oils. Brent crude coming down a little bit, nothing great. I think starting to make a little push in the straight right now, so I think that's going to give a little relief to oil, hopefully. Once we start escorting some of these ships through the strait, that's going to really start helping the price of oil start to come down. So you can see right now, oil, we're still elevated right now. I would say this $109.93, pretty big level that I had up here for yesterday, bounced right off of it. Watch that level. If you lose that level, which will be good, you pull down to the 106.51 level, and then maybe you can get down to this 102.15 level, which is the 20-day moving average. And then if you lose that, you come down below $100 a barrel to $98.32. So let's get into the crude. Crude also, same thing. We'd like to see crude, which is impacts everybody here at the United States, at least in our pocketbook when we go to the gas and fill up at the pump. $101.03. Same thing yesterday. Pretty decent level here from Friday. Watch that level. Like to see us dip below that. Maybe break the lows from Friday and then come back down here, $96.52 a barrel, which is nice. I'd like to see us below this 50-day moving average at $92.57 a barrel. That would actually be pretty nice here. So on the upside, you definitely, we don't want to get above this 110.11 area, right? So you got to watch that level. Maybe watch the highs from yesterday. $107.50 a barrel. But it seems like we're coming off a little bit right now. So I think the more positive news that we get out of the strait, the more oil is going to start to sink here. So anyways, let's get into our regular routine. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button and like this video. And then also go down in the description and hit that link so you can join our Discord community, free community. And then if you're there for a while and you want to upgrade, you can upgrade to our trading desk from 9:30 a.m. to 11 a.m. Eastern time for live trading options of what I pretty much do in there, trading Tesla options. And I also answer any questions that everybody has, because you're not trading an hour and a half straight, right? You're just being selective. So ES right now, nice push here. However, this 27.71.5 level, pretty significant level, bounced right off of it yesterday. So I would say not looking long unless you can regain that level and then maybe regain this high here, which is a pre-market. It looks like a pre-market high here, post-market high from Friday. If you do regain that, then you're going to push into this 7,300 level again. I think that 7,300 level is going to give us some resistance again. So good chance maybe we push back into it and it creates a double top. If it does, then then I would say that you're going to get some downside. It looks like you should get some downside, right? But if you look at everybody's been saying, oh, we should be getting some downside ever since what date is that? Ever since the beginning of April. Right, so it's actually been going up a lot higher than that. So if we go to the 4 hour, I mean, look at this beautiful move down here. This is ridiculous. This move that we've had here since March, straight uphill. Boom. Really no pullbacks that everybody's been waiting for, and it just keeps stair-stepping higher. And right now, what I'm looking at here, as you look at it holistically, I know it looks a little noisy for everybody, but right now, all this looks like is it's getting used to this price level right now, kind of, doing a little consolidation in here. We're pushing higher right now. This is a 4 hour chart we're looking at right now. So if we break this down to a 15-minute, gives you a little more holistic view. But on a 10-day, it's just showing that you're consolidating here, right? see, it's consolidating higher, as a matter of fact, what it's doing here. So this is consolidation right now. Now we're breaking up, and so we're consolidating higher. So I'll pull back into this 70. Actually, it already pulled back nicely yesterday, that 7,200 level. I had talked about that yesterday morning in the pre-market. I would not be surprised if you get some rejection right here, maybe you continue to pull back and you lose this 127% extension, 72.3641 of the Fibonacci level that I have here. And let me just see where we're at here on that one. And that is from the 15th of April. So be prepared, 7,300. If you push into there, you could get a little resistance again, creating a little bit of a double top here. So anyways, let's get into the SPY. SPY is going to be very similar, except the SPY, we never touched this 127% Fibonacci level there. So I like that to still target on the upside there. Probably put here, I would say maybe that's a pretty decent level right now. 724.24. That's going to be your line in the sand. If you get above that, I like the longs. If you're below this, I like the pop and fades. I would say, decent pullback yesterday and still holding up strong. So again, same thing as what we're looking at on the ES. It is pretty much a stair-stepping higher consolidation pattern here. So consolidating higher. Now we're consolidating a little tiny higher. But I think we're just at cautious levels right now, right? I think I ideally I'd like to see that pullback at least into this 20-day moving average at 701.45. The ideal pullback would be this open point of control level that we have here at 682.26, right? So you can see how this lines up. This point of control lines up nicely right here, right? So if you lose this, I would say this level right here, this 710-ish area level, then you can start making your way down, right? Then all these longs are going to start getting, covering and maybe getting a new position in there. So let's get over to the NASDAQ. Over the NASDAQ, I like the NASDAQ too. Everything is going to be kind of telling you the same thing, consolidating higher, right? Stair-stepping higher here, still pushing into the highs. So you got to watch, the pullbacks, because I think if you do start to get a pullback, it's going to be some violent news that comes out, and it's going to really catch you off guard. So don't get too complacent up here. However, do you add position? Do you take on new positions up here? I mean, I wouldn't, but that's me. Everybody is probably saying that same thing, like right here. Do you take on new positions right here? People are probably saying, well, maybe some people would say yes, because it's a breakout. It's a break in structure, not a bad level. So you can see this level here as we fan out here. This is a fantastic level. If the NASDAQ does pull back here to this 26,374, I know that's quite a bit of ways. But, it's not inconceivable if the market starts heading south right now. But look at this straight up move. It's unbelievable, right? So I would say right now what you're looking at this 2731.17. This is that Fibonacci extension that we were talking about I think last week. And now you can see we're above it. So you could probably use this as a level of support if the market does pull back, or you're line in the sand if you're going to lose that level, right? So we still have this open point of control level open at 25,999. Call it 26,000 even, which is a nice level if you do get that pullback though. Your thesis though, what we're all looking for on our thesis today is we're looking for pullback longs. So look at your levels, looking for your areas where if the market does pull back, you get yourself into a nice long position here. So I would say right now, decent pullback. I mean, I don't mind this pullback down here. This 27,617. If you lose that, I always like pulling back into a high, 27,462.50. As far as the upside is concerned, I don't have any levels on the upside, so I'm not even going there right now because I just think that if you're going to have your levels at your psychological levels, your 2806, and we're there right now. So I would not be surprised if the market pulls back from this level. However, the market's not, it's been a crazy V-shaped rally, and people are waiting for the markets to pull back, and they're just not. However, I think the institutional money got in at the right time, And the money that's sitting on the sidelines right now is pretty much retail money. All that dry powder sitting on they're talking trillions of dollars sitting on the sidelines right now. So here we are on the Qs. Qs very similar. Got above the 127% Fibonacci level, 674.49. I would like to see a little more pullback. Let me see if I can get something better on here. Let's go here. So I would like to see, I would not mind a pullback to 661.16. I'm just going to mark that right now. This would be a really good pullback if you can get that pullback. You're not going to get that kind of violent move right now unless there's some kind of earth-shattering news that comes out. Like I said, not a bad level right there. First one before that, this one actually could be a decent level too. I do like where they come in. How you like your levels? You like where you have a high that comes into confirmation with a low, right? So here was the high. You saw that rejection right there. You popped through it, held it, boom. So this level is pretty good too, 666.64. So far, this level's holding up. Take a shot, take a screenshot of it, put it on your computers. Boom. Okay. Tesla. Let's get into Tesla. Tesla level yesterday. Fantastic regressional trend line level that I have here. This is from the high of last year that I've had here. So if I go out and fan out, 444. I took this, I made this regressional trend line from the very all-time highs, and I drew it down here. So you can see as the market was pulling back, you can utilize these lines, these trend lines. This white line is the midline regressional trend line. You could see how the market responded to it, right? So at first, initially came down right here, popped off it, lost it, tried to hold it, and it's kind of like it acts as like a clothesline, right? Market was gravitating to it. So now here we are, fast forward, we're above the higher end regressional trend line right now. So yesterday, we pulled back. Let's get this down here so we can see it better. So yesterday, here is that red line here. This is the regressional trend line here. That's the higher end. We came down and boom, like a rock star, pulled right off of it. So I like that level. I would say longs for today. And so I'm also, I told everybody last week that I was beta testing this new indicator that I've been playing with, where it is pretty much telling me where to buy and sell. Okay, so if we went over, so I started testing it out on Friday. Friday was great. Original put move here. It said exit the put right here, and then it said gave a call. The blue line is your first target. The dotted line is your second target, right? And it gives you both on both sides, right? On the put side, this was your target on the put side, first target. This was your dotted line here for your second target. And then your stop is in this noise right in here, right? So I have a lot on here right now, so because I'm just trying to show you. So now yesterday was kind of range bound here. So what happens is when the market opens up, and I've identified things, these dotted lines here, this yellow dotted line, is a pre-market high and low. Now, these levels are used through traders all over the place. You can see yesterday, after we bounced back up in here, bounced off of this regressional trend line here, 385 area, there was some put plays, and we'll go over that in a minute. So I made money on the puts, and I made some money on the calls as well. But it didn't hit your targets, but you could still make your money, right? So this green line here is the 5-minute opening range on the high side. Here it is on the low side. So you broke, and you made a couple dollars on the downside, and when you broke, you made a couple dollars on the upside. You don't need to make $10 a move to make money, people. You need your premium price when it comes to options. You need your premium price to move 40, 50 cents. That's it. And keep going back and forth. You can make money. I'll get onto that in a minute. Let's just finish these levels. I would say for today, what you're looking at today on the levels today, I do like I do like a push into this 397.82 level. If you can get that push, watch what happens there. If it does reject, you're forming a double top for right now. I have this dotted line here, this 393.83. This was yesterday's high of the pre-market. So I'm gonna kind of look at that. I'm gonna see how much solid levels, those come into play as far as going forward. So I'm going to have these dotted lines here, and it's all going to be, based on this opening day trade. So I have this up here. So you can see right now, these dotted lines are already forming. Here's the low of the pre-market. Here's the high. So these are going to be pretty, important levels, and you can use these levels for trading off of, right? So if you're above the pre-market high, you're going long. If you're below, you can take your short and use your stop just above it, right? So all different ways to use your levels when it comes to trading in this 5-minute opening range, right? So let's get over to what we're going to do for today. So here is this is my screen that you'll see if you come into and you join the Discord community for the live trading from 9:30 to 11 a.m. So right here, I usually hit, this is my script that I have on here, which identifies your 5-minute opening range trade. So it's the same thing I was just showing you there before, except this is just a little more solid, and it's just more pleasant for my eyes. So I have this script here, but if you look at the way I was trading 10 years ago versus the way I'm trading right now, things evolve. You have to continue to evolve as a trader. Now, what does that mean? Does that mean that, I have to switch everything, and every day if the trade didn't work out, I have to throw my trade, in the trash? Absolutely not. You need a proper base, and the proper base is this 5-minute opening range. It's used by millions of traders out there. Why? Because we talk about it all the time. The first 5 minutes of trading, you could see, is where you have a big volume, big purge of volume, and that happens until the end of the day, right? And then you get your purge in the morning, volume drops off, and then the institutional guys come back in later on in the day, right? So yesterday, kind of wicky. You could have made a little move on the first initial pop, and then you made a little pop, and then you made your money later on at about 10:15. I made my money on the puts, and I actually, and then I got out right at my regressional trend line here. Even though if you went to this new indicator that I have on here, the first target was right here. I did not want to take it there because of this, right? And also Tesla's been very strongly as of late. So you have to keep that in mind too, the direction you want to take your trade. So as far as what I want to do for today, I'm going to do a expiration for tomorrow. So we're going to use the May 6th expiration dates. I'm going to start with the 395 calls. And you can see we're above yesterday's close, about 392. So I'm also going to start with the 395 puts, and I'm going to see where the market takes us from there. And all of this, what you see right here, this is another script that I'm playing with here, identifying early entries and just not putting live money on yet, just analyzing it, seeing how it works with all the rest of my trades here, right? So this looks a little noisy for you. This is not typical of what you're going to see when you come to the trading room. It's a lot cleaner. It's pretty much what you're going to see right here, right? Shows me my levels. It shows me right here. This one thing that we forgot to go over, point of controls. Point of control got filled yesterday. So let's get over here. Clean point of control. Where are you? Clean. And we'll go to the 15-minute as usual. So you can see right here we had a point of control open from Friday at 394.87. Tried to get up there yesterday, so I did not close it yesterday, so it was still open. And unfortunately, boom, we closed it right now in pre-market. So that is going to be closed. So I'm going to go to this point of control right here, and I am just going to write filled, if I could spell correctly, and go 5126. So we're gonna see how long we'll leave this up here for. It's a short-term point of control. I like the longer terms point of control, and of course we still have this open point of control down here at 333.97. That's still open, but on the positive side, we have our open point of controls that are open on the upside still, which is pretty good. Got a 455.12 from January 5th, and then you got a 478.39 level from the December 26th of last year. So those levels are still there. Anyways, that's what we're pretty much going to use. We're going to start out today with the 395 calls and the 395 puts, and we'll see where it goes from there. Anyways, that's going to be it for today. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. Go down, hit that description link, and join our Discord community. and that is for free. And also, don't forget to go to the website and put your name and email address in there so you can get your weekly newsletter. We've put out 7 editions already, so it's pretty good. So, and I would like constructive criticism on it. If there's things that you would like me to add, I have no problem doing that as well. Anyways, that's going to be it for today. Trade light. You don't have to go crazy. See everybody tomorrow.